Hello and welcome back to this channel. Improve your price action trading strategy. The main goal in this presentation is to offer viewers trading information and strategy that are only based on price action trading. Everything you need to know about the price going upward, downward, accumulation and build up, or distribution and range bound can be found directly on your chart. You can easily absorb how the price break out the resistance or break down the support, which is an excellent moment of entry for traders. You do not need neither fancy, expensive, and overused chart indicator, nor a trading station with a stack of monitors that can confuse you more than ever. A price action trader believes that the only source of information comes from the price itself and its movement through candlestick psychology and its reaction relative to each other. All you need to get into the trading market is the knowledge of simple moving average, trend line, support and resistance levels. Candlestick patterns and candlestick blending can also give you an extra knowledge to find your precise entry faster. Finally, I have prepared you so many practical examples to clarify the principle of price action trading strategy. So stay with me. One of the most important aspects of price action trading strategy is to identify the support and resistance on your chart. For example, a static support like here or like here is a horizontal area where the buyers willing to push the price higher. For example, here the buyers are here and would like to push the price higher. The same thing as here. Same thing as here. The buyers would like to push the price higher. And a static resistant like this area is a horizontal area where the sellers would like to push the price lower. For example, these are the seller here and would like to push the price lower, like here, like here. And also here, the seller would like to push the price lower. So the level can act as a dual action, support and resistance. From here, for example, this level from here till here, it considered as support. And from here to here, it considered as resistance. The same thing as here. This is support till here. And from here, that is resistance. Now, static support and resistance are also very useful when the market is in range bound or sideways market. So identifying support and resistance is very important and is very important part of the price action trading strategy. Dynamic support and resistance like simple moving average is an area that moves with the price, so it is not static like horizontal support and resistance that doesn't move with the price. In this graph, I installed two simple moving average, one SMA 42 indicated with this blue line and another one SMA 12 with the 12 days period that indicated with this brown, dark brown line. Now, when the price is above these two moving average, then these two moving average considered as dynamic support, and that is the characteristics of an upward trend. And when the price is below these two moving average, then these two moving average considered as dynamic resistance, like here and also right here, and that is the characteristics of a downtrend, like here, and downtrend, like here. Now, this brown line is an obvious dynamic support and resistant area with considerable touches. For example, I have 7 touches here, and this part considered as support. So you see lots of price rejection. And from here to here, I have 2 touches, and this part considered as dynamic resistance. And also from here to here, I have 3 price rejection. So this part, it considered as dynamic resistant. So you see that this moving average, it has a dual function, as it can act as a dynamic support or can act as a dynamic resistance. So we see in this graph that moving average or dynamic support and resistance considered as very important part of price action trading strategy. Dynamic trend line is also considered as a dynamic support and resistance since it moves with the price, so it's not static like horizontal support and resistance. In this dynamic support, I have almost 6 touches, which is very valid support. These are the areas where you can enter the market, because from here, that's a price rejection, and the price going up and going up, that's the rejection. So you can enter the market, and in this part, you see that the price broke the support and going down. So later on, I'm going to talk about it, that what is the best strategy to enter the market here. So we can use probably candlestick formation, candlestick blending, and so I'm going to show you exactly how you can enter the market precisely and you make profit. So trend line is also one of the most important aspect of price action trading strategy. In this graph, which I took from Air Canada, I installed SMA 50, simple moving average with 50 days period. Now, the price, it's going up and first hitting the resistant area. These are resistant area. And then undergo a period of range and consolidation or distribution. So in this period, you see SMA 50, it's flattened, and the price is fluctuating around the moving average. There is nothing going on. The price is in range or sideways market. Now, after this, the price has 2 choices, whether it breaks the resistance to go upward, like this situation. And in this situation, the traders can get the benefit and enter the market here, or the trend may reverse the direction and go downward, so they can exit the market. Now, precisely where to enter the market, I'm going to show you later on. But as the price break the resistance and going upward, it is making a higher high, higher low, higher high, higher low, higher high, higher low, and so on. That's the characteristics of a strong uptrend. And in a strong uptrend, the price is always above the SMA, the simple moving average, or dynamic support and resistance. And especially you have a couple of touches, which is price rejection. So the dynamic support and resistance here, moving average or trend line, can be horizontal support and resistance, or can be wedges, triangle. These are very important, valuable areas that you can catch the trade. So you see price action, it's very easy way for traders to trade without using lots of sophisticated indicators. Now this is the same graph as before. The only thing is I magnify it a little bit more so you can see it more clearly. Now the price when the break the resistance and go upward, you see it making a series of higher high, higher low, higher high, higher low, and so on. And you see when it goes upward, you see the candlesticks, they're larger, stronger. And when it goes higher low, the candles become smaller. And you see larger, smaller, and so on. So that is the characteristics of a strong uptrend. And also, we can use candlestick formations and those patterns that where to enter the market. I'm going to show you later on. In this graph, I installed simple moving average with 50 days period. The price first coming down and hitting the support area, and then undergo a period of range and build up and accumulation. This happened after a falling or declining in price. You see the SMA 50 is flattened. The price bouncing around moving average here, and then the price may break down the support and going downward, or the price simply may reverse the direction and going upward. So in either case, this is the best area to enter and exit the trading market. The obvious support and resistance area could be SMA, trend line, wedges, triangle, or a static horizontal support and resistance, which considered as a valuable area. When the price is coming down, it is making a series of lower low, lower high, lower low, lower high, and so on. And that is the characteristics of a downtrend. And in a downtrend, the price is always below the simple moving average, which is it is. And this one, downtrend, the price is below the simple moving average. So here you see that the price action is very simple to trade. This is the same graph as before. That is the SMA 50 simple moving average with 50 days. And this is the support area where the SMA is flattened and the price is fluctuating around the moving average. I'm going to talk about it later, but you can use lots of known pattern and formations, candlestick mat blending in order to enter or exit the trade and make money. And here the price here broke the support and going downward. So this is a very good idea or good place to exit the market. Now, from a few slides back, we can conclude that when the price is increasing, going upward, you can be a buyer, not a seller. Look for breakout to enter the market. And when the price is decreasing, like here, you can be a seller, not a buyer. Then wait for breakout to exit the market. In other words, the best timing to enter and exit the trading market, we can get help from candlestick formations or candlestick mat blending. So, which I'm going to talk about it in a few next slides. In this graph, I'm going to ask you, what is a candlestick? A candlestick is a type of price chart used in technical analysis to display the high and the low, open and close price of a stock for a specific period. And the range of the candle is the distance between the high and the low of the candle. Now, in the morning when the stock opens, the stock market opens, the price opens here, it comes down because the sellers pushed the price down, and it got after rejected by the buyers, and the buyers pushed the price up and leave a retracement, lower shadow, and it goes up all the way there, and again the sellers push the price down and closes here and leave a upper shadow retracement. Now, in this case, the price opened in the morning here, and then the price go up because of the buyer's power, and then again rejected by the sellers and left a retracement here or upper shadow. The price moved down all the way here and again got rejected by the seller, or excuse me, by the buyers, and closes here and leave a retracement. Now, the range of the candle, as we say, is the high, the distance between high and a low of a candlestick. Now, if the close price closes near the high relative to the range, this is a bullish candle, or the buyers are in control. If the close price be near the low relative to the range of the candle, that is a bearish candle, or the sellers is in control. So from now on, I'm going to ask these two questions. Who is in control, the bull or the bear? Where did the candle close relative to its range? If it's closed near the high, that's a bull. If it's closed near the low, that's a bear. Now, in this graph, I demonstrate hammer and shooting star candlestick reversal pattern. Now, I'm asking you the same two questions. In this candle, who's in control, the bull or the bear? And the next question is, where did the candle closes relative to its range? It closes here near the high relative to its range. So that means that's a bullish. So the color is green, no problem. Now here, where it closed near the high relative to its range. So that is bullish also, although the color is red. So that's a bullish candle. So that is the reason we see the hammer, doesn't matter the color. If you see a hammer at the bottom of a downtrend, it suggests trend reversal. Now, in this candle, where the candle close relative to its range, it closes here near the low relative to the range. So that's the bearish candle. The color is red. What about this one? It closes here near the low relative to the range. So that's a bearish candle, although the color is green. So that is the reason they say shooting star, doesn't matter the color. If you see the shooting star at the top of an upward trend, it suggests trend reversal. Now, in these candles or pin bar, the size of the shadow should be 2 or 3 times longer than the size of the body. That is important. In this graph, I demonstrate two formation, bearish tweezer top and bullish tweezer bottom. Bearish tweezer top consists of two candles. The first one is a bullish, the second one is bearish. Now, if you see these two candles at the top of an upward trend, it suggests trend reversal. Why? Because if we blend these two candles, we take the open of the first, close of the last, the high and the low of the pattern, you get a bullish shooting star. And then although the color is green, but we ask the same questions. Who is in control, the bull or the bear? Where did the candle closes relative to its range? So it closes here near the low relative to this range. So that's the bearish candle. So this is a bearish shooting star at the top of an upward trend. That is suggests trend reversal. And this is another two candles. One of them is bearish, another one is bullish. And if you see these two at the bottom of a downtrend, it suggests trend reversal. Now the outcome, if we blend it, we get a bearish hammer. But actually that's a bullish. Why? Because where did the candle closes relative to its range? It closes here near the high relative to its range. So that is a bullish. If you see this one at the bottom of a downtrend, it suggests trend reversal from downtrend to uptrend. So this is the two formations that it's very important to remember. Now here we have two formations. One of them is bullish engulfing and bearish engulfing. Bullish engulfing consists of two candles. One of them is bearish and another one is bullish, which this bullish engulf the bearish candle. Now, if you do not know the name, we can blend this, and the outcome of blending is nothing but a bullish hammer. And if you see this bullish hammer at the bottom of a downtrend, it suggests trend reversal. And this is a bearish engulfing. The bearish candle engulf the bullish one. Now, if you blend these two candles, you get a bearish shooting star. Now, if you see this bearish shooting star at the top of an upward trend, it suggests the trend reversal. So you see, we have so many patterns that we cannot remember all of them, but I show you how you blend candles. I have few videos on candlestick matte blending, so please check those videos in order to increase your trading knowledge. Now, so we are going to use this one in order to enter and exit the market. This is your channel, and I'm trying my best to improve your trading knowledge to make profit from the stock market. I have so many valuable trading information to pass on to you, and in order that you receive it on time, please subscribe and support this channel, and thank you in advance. This is Yahoo Finance BMO stock. I installed SMA 50 with the 50 days period. Now the price is strong and above the simple moving average. So this considered as dynamic support. The simple moving average here is considered dynamic support since the price is above the simple moving average. Now the price is making higher high, higher low, higher high, higher low, higher high, higher low. and all the way to the top. That's the characteristics of a strong uptrend. Now, in a strong uptrend, this is higher than the previous one. This is higher than the previous one. This is a reversal point, higher than the previous one. This is higher than previous one. Then this higher low, this is higher than the previous one. This is higher than previous one. This is higher than previous. So that is the characteristics of a strong uptrend. So that is a very good one, that you know the price action. So by now you know that this is a small uptrend, and if you enter the market, you are going to make money because the trend is going to go up. Another thing is this higher swing high, which considered as a long leg of the trend, is bigger than the higher low, the short leg of the trend. So this is bigger than this. This is bigger than this. This is bigger than this. And this is bigger than this. So that is another good point that you know in price action. Not only that, in a strong uptrend, the long leg of the trend, the candles are big. Here, the candles are very big. So the candles are very big. So if the candles are big, that is the sign of buyers are very strong. The buyers are very strong. That's a sign of a strength, and the buyers are very strong. But if the candles are small, if the candles of this, the size of the candles are getting smaller, that is the sign of buyers are exhausted, and the uptrend is slow down or near reversal. Now, the short leg of the trend, if the candles in short leg of the trend is small, is very small and tiny, that is the sign of a healthy pullback. So when the trend is trending, it pull back and go up, it pull back and go up, and pull back and go up. So that is, you know, that that's a sign of pullback. But if the candles are big, the size of the candles are big, there is an increased bearish counter pressure from sellers, and the uptrends facing difficulties. So it means probably slow down or near reversal. Now, but if we use candlestick pattern and formations or candlestick matte blending, then we can make our entry with more precision. So that makes a big difference if you use candlestick formations and candlestick blending. So that is very good. So these are basically the price action in a strong uptrend. This is Yo Finance BMO stock. I installed SMA 50 days moving average, and this is a strong downtrend. And in strong downtrend, usually the price is below the simple moving average, and this is considered as dynamic resistance. Now the price is making lower low, lower high, lower low, lower high, swing low, swing high, swing low, swing high. And in a strong downtrend, the length of a swing low is bigger than the length of a swing high, and this is bigger than this, this is bigger than this, this is bigger than this, and this swing low, that's they called long leg of the trend, and this is a short leg of the trend. So, and also this lower low is lower than the previous one. This is lower than previous one, and this is lower than previous one. So, and this is a lower high, this is lower than previous one, this is lower than previous one, this is lower than previous one. So that is the characteristics of strong downtrend. So that's the price action. So you don't need any formations and patterns and this and that. So this is the behavior of the candles. So you know that that's a strong downtrend that you can exit the market. Now, in a strong downtrend, in a especially long leg of the trend, the bearish candles are very big. Bearish candles are big. That's the sign of strength of downtrend. If these bearish candles are small, that means the bearish movement is exhausted and the power of the bearish is exhausted and the trend is slowing down and near reversal. Now, in a short leg of the trend, if the candles are small, that's the sign of a healthy pullback. So that is coming down and pull back, coming down and pull back. So that's a healthy sign of the trend. But if these candles are very strong and big, that means there is a big counter pressure from buyers, and that makes this downtrend facing with the difficulty. And here that I say the pattern is broken. If this pattern, which is lower low, lower high, lower low, lower high, it's broken, which is broken here, that means the trend is near reversal. And you see that is correct. The downtrend, it's finished and it reverses here. So that is basically a price action that we learned in this downtrend. This is the same chart as we see before. I amplify it that you see more clearly. This is a strong downtrend, and here you see the candlesticks that are more visible. You can see some patterns like this that you can exit the market, or for example here that you can enter the market. So you can find lots of point in order that from this swing low, swing high, swing low, swing high, so you can find those nice places that you can enter or exit the market that you make money. So this is a strong downtrend. This is a strong uptrend, the trend making swing high, swing low, swing high, swing low, swing high, swing low, and swing high, swing low. So basically, if you use those formations, support and resistance formations and patterns, candlestick matte blending, you can find lots of points that you can enter the market and ride this trend. For example, here, or you can probably exit the market because let's say you have a shooting star and you know that the trend is going to go downward. Now, we can conclude that when the price is in support or resistance, if it break out the resistance, you can enter the market. You can be a buyer, not the seller. If you are at the support and the price break the support, you can be a seller, not a buyer. And on the support, when the price is in range, consolidation, also accumulation, distribution, you can be both buyers and sellers, or probably you can stay out and wait for a nice opportunity to re-enter or re-exit again. So this is basically the price action psychology. The price action psychology, that if you know the price action, you can be a good trader. That's all, folks. If you like this video, thumbs up, subscribe to my channel, leave your comments. Thanks for watching. Take care and see you next time.